All right. Good afternoon, everyone. Hope you guys are doing well. Hope you guys had a great day. A lot of bloodshed throughout the markets the entire week. We'll go through the charts. But first off, just a couple things regarding the Silicon Valley banks. It's all over the news today, and that's really the primary driver of what's been happening in your S&P 500 index over the last 48 hours here. As you know, it's all over the news that the regulators in California have shut them down. All right, they shut them down for now. NASDAQ, if you have puts or positions in SIVB or any type of position, you're not likely to see anything happen with the stock for at least maybe the next several days until NASDAQ receives some requested information from the bank. But as of now, this is one of the this particular bank is the number 18th or 16th largest in the country, so it is pretty much a big deal. And typically, we've seen this. This kind of reminiscent of 2008, right? The Great Financial Crisis, and when the banks started folding. All right, that's going into the weeks ahead. What's happening? What could happen is a domino effect. Okay, I think the market is so scared right now of a potential 2008 crisis that it's selling off pretty hard. Okay, we may see a couple of bounces here and there in the next, couple in the next several days, next week, especially with CPI data. But if this particular news keeps hitting the headlines, we're going to see more downside selling pressure. All right, who knows if this is an isolated incident or isolated situation, or if it's just going to start affecting smaller banks, right? We saw today not just SIVB going down, but FRC. This is First Republic Bank, which lost about 15 points, 15% this morning, but nearly dropped 50% at the lows of the day and did recuperate some. And this is starting to hit your JPM, your Citibank, et cetera. Now, JPM did kind of make a somewhat of recovery today, up to about $3 on a day, hit a low of 127. All right. But what's different about this particular situation is if you know Silicon Valley Bank, is that they are the bank for startups. Okay. So that's how they market themselves. So if you get a Series A funding or Series B funding or whatever, and you run a startup company, okay, you generally deposit money with them. Okay. And during the whole startup, thing that happened back in, I think, 2015, 2010s, okay, early 2000s, where a lot of innovative companies were starting up here in Silicon Valley, here in California. What they did was they deposited all those big funds and investor money into Silicon Valley Bank. All right. So it's not your average consumer bank, it's more for companies. Now, what happened was they had tons of money coming in on deposit. Okay. And what they did with that money was that they wanted to put it to use or put it to work. So what they did over the last couple years is they started to buy mortgage-backed securities, or MBS. Okay. And guess what happened? All right. Feds started to rate hike. All right. So that's a disaster waiting to happen, because now those MBSs are losing money. Okay. So once they lose money, then, well, the bank is not getting more deposits from their customers because startup funding is slowing down. Not a lot of folks are starting new companies. Not a lot of venture capitalist firms are investing in companies or new startups because everybody's tightening their belts, right? And as these MBSs go down, they're losing money with no inflow to consumer or customer deposits. Okay. So with that being said, you hear a lot of stories on Twitter right now. Certain companies with 7-8 figures of money cannot withdraw their money. It sounds like, FTX almost, in a way. So that's what's happening. So this isn't hopefully we don't see this type of situation in JPM and some of the larger banks. Okay. So you certainly don't want to see that. If that happens, if this is a trickle down effect or if this is a domino effect, then it's really going to hurt the market. All right. Doesn't matter if we have a soft CPI, the market's just going to dump everything in fear of a potential 2008 crisis. Now, moving on. All right. Next week, we have data. All right, I just want to give you that piece on Silicon Valley Bank. With that being said, next week, obviously, we're looking forward to the CPI and PPI data coming out on Tuesday morning. Tuesday morning, 8:30 a.m. All right. Core CPI is expected to be 5.5%. Last month was 5.6%. CPI year over year is expected to be 6.0. Last month was 6.4. Remember today, when we saw the NFP report, it was softer, okay, than previously what the market was expecting. So we had a little bounce in the morning, right? So your non-farm payrolls today came in at 311,000 with the forecast 205. Still very hot, obviously. Still added 311,000 jobs. But thank God it's not 517,000 from last month, right? So I think the market actually welcomed the data because it's much lower, right? About 40% lower than February, but it's still above expectations. So guess what, folks? My estimate for CPI going into Tuesday morning is we're going to be in line. We're going to be slightly lower than 6.4. We're going to be slightly lower than 5.6, probably right on line of 5.5. Okay. So I do expect the inflation to be at expectation, but lower the prior month. Now, going to the charts here, we're selling off quite heavily. If you look at the weekly SPY chart, we are below the weekly trend line. All right. That we took that out in one shot today from 393, whatever it was, down to 380, nearly 384. Okay. So you have a bloody weekly engulfing candle, and everybody was faked up by the weekly hammer last week. All right. And you have a 20-day moving average at 396. If we move over to the daily chart, we closed, all right, in the last 2 days, we broke the 200-day MA moving average, all moving averages, 50 MA, all right, and we rejected the 200-day moving average on the slight pump in the morning at 393.13. So rejected right on the money and moved the low to 384. Look at that volume, all right? Look at that volume of selling, which you have not seen this type of selling or this type of volume on SPY and what? Since this buy volume back on, back in February of last year. I hate to say that word, but could this be capitulation, guys? Could this be it? Could this be the fear? This one gigantic leg down? Would that be the final leg down? We'll see. But here's the deal. If we go into Monday and we're still sinking into the lower 380s, okay, we're getting into the zone where we know the infamous chop zone, okay, which is literally 378 to about 385 where we are at. So we are at the top of this chop zone. So we could potentially, I think, with a little bit more blood and a little bit more FUD over the weekend, some more news about Silicon Valley Bank, or maybe another bank goes under, who knows, right? I think we're going to come down into here, all right? But here's the thing that I'm going to do. If we do come down to here, obviously we are very, very oversold. We are, the fear in the market is at extreme levels. I think there's a potential that we can bounce on a inline lower than prior month CPI reading, and following Wednesday you have PPI as well, and Thursday jobless claims, Friday Michigan consumer sentiment. So I'm going to put a downside target. I think we're going to see lower 384 to 383, but I think we're going to there's a potential squeeze setting up here back to 390. Okay, so I'm going to put an upside target, potentially nice CPI print, get the market all excited at 390. All right, I think you'll see a little bit more blood on Monday, and then we're going to chop around and wait for that data. So most likely, depending on what happens Monday, I'm going to buy some calls for that CPI data. I do think that we are selling before the serious data that we need. Generally, we know what happens, right? It usually goes back up. All right. So if we go back to the last CPI, which was February 14th, as you remember, during that day, All right. We did gap down in the morning on the data, but we actually stayed all green all day. Now, a couple of days later, of course, the market did drop, etc. All right. But so that's kind of my estimate for now, 390 upside, and we'll go from there. All right. Over on the Q. Okay. Whew, not looking good either for tech sector. Major volume on the downside today. Holding did fill this gap here early in the week on Thursday, and we continue much lower. We did close under the moving average 200 finally on the Qs. All right. And so we spent both SPY and Q spent a consecutive 33 or 34 days respectively above the 200 day until it got killed today with the Qs. So you're going to see a little bit more blood on the Qs. 288 is a big level. You know, and as far as upside target, I do think that once that CPI comes out, I think the market could be a little excited. I think it can actually come up closer to the 20-day, but I'm just going to put a conservative target of 293 at this time for the Qs. Again, a lot's going to depend on the data next week, but just be careful next week too, because if you look at the intraday today, I want to evaluate this a little bit, okay? The NFP actually came in much lower than most markets was expecting because of Thursday's drop. But Thursday's drop was because of Silicon Valley Bank. And it was also in addition to the fact that Biden proposes a heavy tax, all right, on individuals making $1 million, et cetera, capital gains tax, and markets hate that stuff, okay? Today, we ran up, right? We know that Silicon Valley Bank was halted in the pre-market and is still halted. We actually bounced towards that 200-day moving average on a 5-minute, and it actually corresponds with the 200 daily moving average. And I do believe the market was going to move up slightly after a small pullback. But right when it hit this area, that's when the tweets and the news came out that FDIC or California regulators shut down the bank. And that caused the panic, okay? You can see, given that kind of logic, if we were to have a good CPI reading next week with no FUD from about any banks, I think the market can move up. You look at the 1-hour chart, all right, we're oversold. If you go to the 2-hour chart, we're oversold. You go to the 4-hour chart, we're oversold. When we hit this high from Bostic, the comments from Bostic, okay, we were oversold for a few days, right? At least 2 days or so until finally resets. I swear to you, the stochastics always try to tell you a story. When it's overbought, it's got to come down somehow, some event, somebody will say something to make this oversold, and then we soon will be overbought again. It's just a matter of what the data comes out, who says what Fed, etc. All right. Now the Fed has entered quiet period for the majority from now throughout the FOMC meeting, which will be March 20th to the 21st, and the rate decision will come out on the 21st, 22nd. So we will hear from Jerome Powell on the 22nd. We will have our CPI next Tuesday, PPI next Wednesday. All right. So once again, upside target of 293 on the Qs. SPY, I'm going to put 390. There's got to be a bounce somewhere here on even potentially good data. But again, I expect that bulls could defend this area really well. Okay. Unless, of course, another bank goes down, and we just don't know what tomorrow's headlines will be. So with that,